What's good, guys, and welcome back to episode 5 of Mastering the Markets. Now, this is my free comprehensive trading course that's going to get you from being a beginner trader to learning how to trade by yourself in the markets. Now, in last week's episode, we discussed how to take our first entry type. This is the breakout trade. But in this week's episode, I'm going to introduce you to another entry type, as well as a few other concepts that we use in the market to allow us to trade efficiently. Now, if you haven't seen the last episode, episode 4, that is vital that you go back and watch this before you are watching this episode. So go back, click on episode 4 and watch that one before you do watch this. Otherwise, you're not going to understand some of the stuff that I am saying. Now, before we get into the entry type, what I do want to introduce you to is market trading sessions. Now, these are essentially going to be the times where it's best for you to trade, where the highest volume is, and where most of the people are trading in the market. So just to show you and to visualize it on the charts, I have got a little indicator up here that shows when the session times are. So the three main sessions that we do have are the Tokyo session, London session, and New York session. Essentially, this is the times in which the banks, investment banks, hedge funds, all of that sort of stuff are open during these countries' times. So of course, Tokyo banks open, well, for me, 1 a.m. in the morning all the way till 8 a.m. in the morning. That is when they close. Then at 8 a.m. is when London starts to open and starts to get volume. And then New York takes over at around 2 o'clock my time. But no matter what country you're in, you can figure out what the time zones are. Get an indicator like this that shows you, or just look it up online, to be honest, and then you can sort of plot it out or memorize the times. But something that's key to note is the opens and closes of these sessions. For example, London open and London close, or New York open and New York close, are times when there is volume coming in and out of the market, because these institutions, banks, hedge funds, etc. are starting to open positions, starting to close positions, manage risk, etc. And that is what is going to push the market in the long run. So we can see here, obviously, when London starts to open, the banks start filling orders, and this is where price starts to push up. And then towards the close, we start to push up again. We get a final little push. Same with New York, right? This one wasn't as prevalent, but if we look at the past, this New York open here, we began to push up very heavily right on the open, and then sort of had another little late push just as it closed. Same thing here, right? London is closing, New York is opening, and the big push starts to happen. So that's important because, as I said last week, we need volume to be present in the market before we take these trades. So if you did want to use this indicator, it's literally just called Market Sessions by Levi. So yeah, you just type Market Sessions and it should be this one here. But yeah, that's a simple thing to show you when these sessions are opening and closing, just to illustrate that for you. Okay, now moving on. Last week we showed you the breakout trade. Now the breakout trade was pretty simple, and this week we're going to show you a similar entry, but this one is called the fake out. Okay, now what the fake out is, it starts as a breakout, but then moving on, we don't end up pushing up, forming the right criteria, and then continuing up to the next range. We end up actually closing back into the range that we've just broken out of. So what does that look like? Well, let's say, for example, that we end up closing down here into this range, okay, on Euro USD right here. Now, if the next candle, you might be looking for a, top wick to be formed and then a flip down. But if that doesn't happen and the next candle closes back in the range, something like this, okay, what we can then do is we can end up taking the buys to come back up. Same as the breakout, we need a bottom wick first, take the buys to come up and fill this range, because as always, we have still broken back into a range, so we should expect to fill it. Now, an important thing to note with this is we are obviously still taking into account the daily bias, right? So as you can see, Euro USD is pretty bearish, to be honest, on our bias. We did end up, closing, respecting this level just here, and we did grab a lot of liquidity on the previous daily candle. We have now grabbed the top wick, and we started to flip down to continue to the downside. Now, let's say that we do end up doing a fake out like I just drew out. We wouldn't be able to take that one because that would still only be a range 1 breakout. Let's say we do something like this and then we close back into this range. That is still only 1 breakout to the bullish side, right? So this is essentially still our range 1, and for buyers we would need range 2, so we'd have to still wait for something to come up here and close above. But if we had a vice versa fake out, right, the opposite side, let's say that we ended up closing up here, bearing in mind we are bearish for the daily, we ended up closing at this level, and then we did come to end up faking out back into the range like this. Obviously we can't take buyers at the minute because that's still only a range 1 breakout, but if we did then end up faking back into this range here, closing like this, and then grabbing a top wick, we would be able to place our sell stop on the flip of this candle like this, in order for that candle to then come and fill the next range like this. That is essentially the play with the fake outs. We're looking for the same top wick and bottom wick being formed the same as the breakout, but this time we're closing out of the range and closing back inside, expecting to fill that next range down. Obviously, it would be the same with buys to the opposite side if we were bullish, but for this example, we've used sells, so just imagine it vice versa. Another thing that we can look at, let's say we close back into this range now and we're looking to catch that fake out, but this candle doesn't exactly form the top wick that you want it to form, right? Let's say that it forms a small top wick, something like this. That's not enough for you. What you can then do is wait for the break of this candle low here. So then we could put our order on the break of this candle low like this. Once this candle comes down and then breaks that low, we'll be entered into those sells to come and fill the range, looking a little something like this with that small top wick. That's a valid play too. And the same as the breakout as well, what we can look for is we can look if we had that small top wick being formed, small bottom wick being formed first before we make that top wick, then we could end up taking the break of the current candle low like that to come down. So your order level would have been on the break of that low somewhere around here. Exactly the same as the breakout as we discussed last week, just faking out back into the range, and it's a good play for us to catch. It's a very high probability trade. I do believe we have around an 85% win rate with the fake out this year, so it's a very good play to take, and the majority of the time we are going to fill that range after faking out of it. As always, let me know if you do have any questions, guys. If you don't understand something or you want to just clarify something, you can DM me, put a comment down below, or jump into the Discord group, and yeah, ask me any of the questions that you have and I will try and answer them for you. If you did get some value out of this and you did get some educational content that you will use going forward, please drop a like. And if you want to see specific topics coming up in the future for the course, then drop them down below. I'm more than happy to tailor this course to your guys' needs. Many thanks, appreciate you all very much. Leave a like, subscribe if you are new, and I'll catch you in the next one. Peace out.